Yeah, thank you everyone for joining. This is the third of these events that we've done. Some of you may have joined before, was on defense tech. The second was on longevity, and this one on deep tech. It's a hot topic, an area we've been doing a lot of research on in recent months and years, in fact. And we recently released a big report about it, which we kind of teased at Slush, and we launched at Hello Tomorrow. And here we're going to be running through some of the findings and also getting Lorenzo's take on what's behind some of the numbers as well. So Deal Room, for those who don't know, we are a data platform that track startups, venture capital, innovation. We map the world's startups ecosystems, and we're the source of record for all things data on innovation, tech, venture capital. Yeah, and we're gonna kick things off, I think. So we can show some of the people who were coming along today. So lots of interest in this topic. I think it's one of the hottest topics we've done. And these are some of the people who are in the room or intending to come along today. So lots of existing partners and others as well, from VC to government, the innovation ecosystems, corporates, banks, all sorts. So this is clearly a topic with a lot of interest from all different stakeholders in tech ecosystems. And so without further ado, Lorenzo, maybe I'll let you crack on.
Yeah, no, thanks all for joining us today. I'm Lorenzo, the head of research at DROM, and I've been working with Lakestar, Walden, Catalyst, and Hello Tomorrow for several months doing this European Deep Tech report. And today our plan is to share some selected insights from this with some additional extra data point and thoughts, and then to explore, some hard question about the deep tech ecosystem in Europe. And of course, it's a chance for all of you to interact with us, ask us anything you want at any time. We will pick the questions either right away or at the end of the Q&A.
We've got a kind of one-line description of what deep tech is. Do you want to share that as well?
Yeah, so we define deep tech as novel engineering or science applied for the first time in a product. So it's kind of, new either science or also like how you can translate that science into an engineering thing, and then you bring it for the first time into market. So of course, it evolves all the time. What is deep tech today is not deep tech in 5 years, because then it gets commercial and it becomes just regular tech, basically.
And how do we go about then sort of assigning which companies are deep tech, which ones not, and therefore which companies get included in all of this data as well? Do you want to explain that maybe?
Yeah, sure. So we look at, of course, what the company does. And when I mean what the company does, it's not just do they make batteries, but do they make silicon anode batteries? Do they do a new electrode architecture, or do they just manufacture what is the state of the art, normal lithium chemistry? And then based on that, it's a lot of the assessment. And of course, we look at, company website, other info, news. We also look at, if the company has patents, if they are a spin-out, and these kind of things. They are all like indicative factors. It's not like a deep tech company must have patents or must be a spin-out. Many startups don't have patents for several reasons, but they are still deep tech, and many do have a ton of patents and they're not deep tech. So we use all of this data, also the founder background, as a kind of indicators, but most of it is really what are they doing, and we keep assessing this as they grow, of course. And we also use an historical lens, in the sense that if a company is starting today, then we consider what is deep tech today. But if they started 10 years ago, then we try to consider what was deep tech at the time, because otherwise, we cannot draw any historical comparison.
Cool, nice.
Yeah, so one thing that we wanted to focus a bit this year was debunking or confirming some deep tech myths, because there's a lot of stuff being said that deep tech, what the hell deep tech is totally a new thing in venture capital or not. Do the companies need more time and capital to scale, these kind of things? And so we wanted to check some of these from the data perspective. I will not go into all of them. We unpack each of that in the full report, but one that of course is often discussed is the capital intensiveness. And yeah, from our analysis, pretty much at every stage, of course, deep tech companies need a bit more capital than regular tech. So this is definitely true. This difference can vary a bit, depending if it's late stage more than early. But what's interesting, of course, is often to discuss how this money gets spent, which how we unpack in the report is that a lot of the capital spent in deep tech is actually going towards capital expenditure and toward building actually a moat and some, tech advantage, while sometimes in SaaS or other sectors, maybe 20-40% of the capital is spent even just on advertising and marketing. So, this capital also has a return on investment. Another myth that, it's actually true is that, of course, deep tech companies require more time and more VC funding than regular tech to reach significant revenues. This is not true for each revenue stage. Basically, what we see is that a very small revenue milestones, there's a lot that can be, one-off contracts or other things, not really recurring revenues. And there we don't see a ton of difference. At the mid stage, 10, 25 million, we see that deep tech takes more time and capital, but then we see the gap closing, especially on time, when they really scale up and they go fully commercial, maybe they build a plant and this kind of thing. So this makes sense because there's more time that you need to really find that fit and then scale your infrastructure and then you ramp up the revenues. What's not true, it's a narrative that goes around a lot, is that deep tech startups fail more than regular tech. In our data, the profile of success and failure is pretty much the same. There are small differences depending on stage. Deep tech tends to need a bit more time for validation. So of course, there's a bit more failure later on than early on, but pretty much the profile is very similar with the regular tech. And why is that? We can rationalize through a lot of factors. Of course, there's more risk because they need more capital. There's the risk on the technology side that you don't know if it's gonna work, but you have less risk in other parts that is often forgotten, which is competition, because you have less competitors trying to do the same stuff many times. And also usually if the tech works at the correct price point, there's a market for that. While other times when you're building regular tech, there might not be a market sometimes.
And with these different risk profiles, does it mean that there's then different types of investors? Because on the venture side, venture capitalists are used to a certain type of risk and they're very comfortable with that, but deep tech offers different types of risks. And does that change the investor landscape and the people that are interested or willing or patient enough to kind of get involved here?
Yeah, no, absolutely. So of course, there are a lot of investors that are specialized in, let's say, deep tech, or some generalist funds do have, like, say, some deep tech team and deep tech expertise, to manage this different risk profile. Some funds have also slightly, more patient capital, in the sense they are ready to wait a bit more or to take this risk in a different way. But let's say we also saw, and we unpacked this in the report, that actually, the returns for deep tech have been above or pretty much the same as regular tech. So it definitely, pays off to have, to take on this risk and this patient. Still, every investor has his own risk profile. I've spoken to a few that told me that some sectors of deep tech don't fit the risk profile because there's too much science risk, while they prefer to take technology risk. So there are a lot of nuances, and depending, what you are working on, you might be a fit for certain funds in deep tech and not others. So there's always, a lot of nuances then when you get to the bottom of it.
Okay, we need another point on this thing then for science risk. It's together with technology, but in a few spaces there's even science risk, but often it's just technology. Cool. So here is a recap that on the different means. We also look at exits, returns, and the fact that of course deep tech is nothing new for venture capital. Actually, venture capital started with deep tech in Silicon Valley, and with regard to the defense and semiconductor ecosystem in the post-war. Then when we get to actually, the funding landscape in Europe, what we see is that deep tech is being much more resilient than regular tech when we look at the last
4 or 5 years. And it kind of provides an edge against momentum investing. So in the sense that, we saw 2021, 2022 being really a flyer year, both for regular tech and deep tech. But in deep tech, we see the interest, remaining high, while we've seen a much stronger, more than double, decrease when we look at regular tech, because of course, deep tech has different logic, different horizon, and there's, a strategic also interest behind that.
So just to be clear here, so like on the left, we see from sort of peak to last year, investment fell 28% for deep tech, whereas it fell 60% from peak.
Yeah.
For regular tech. You mentioned though that it's acted as a hedge against momentum investing, sort of like hypey investing, I guess. But how does that fit in with the current momentum behind AI, lots of which would kind of fall into deep tech, because we're now seeing massive amounts and like just individual rounds of huge sizes that AI and that would count inside that deep tech segment?
Yeah, no, absolutely. So AI is kind of its own story at the moment. So a lot of that is not deep tech, but a lot of money is also going, of course, in the AI model makers, which we can debate if they are fully deep tech or not, but we consider them as such in most of the analysis. And so, yeah, there's definitely a ton of capital going there. It's definitely, probably there's some kind of hype cycle, but there's also like a huge opportunity, and we are seeing really fast growing revenues, fast growing startups. Are we doing too much? Like, that's debatable. Definitely, we have seen the US like betting on this like at level that we have never seen even in 2021 for some records. But we have a bit on this later on.
Cool. We've just had a question, which was, could you just go over the myths again? Do you want to, maybe we went a little bit fast, we can
sure.
through each of those. And just to let people know that you can add questions in the Q&A, and then we'll come to them if we, either during this or after if we can. Yeah,
so the definition we touched upon, so deep tech as, we define it in this way, is nothing new. It's, like we said, it started this way, even venture capital in the past, and it's always been, shaping the sovereignty of nation. And then on capital and revenue, we touched upon also failure rates. Time to exit, didn't show it here, but this is the full report. We see similar exit timelines compared to regular tech, but there's a bit less history of huge exits because it's, for 20, 30 years, there wasn't that much funding going into deep tech in venture capital. So there's a bit of less of a track record. So what we note, especially also for Europe, is that while some large exits have occurred, we still need more also, to draw the final conclusion on this. And in terms of return, some data show that funds investing in deep tech have had higher internal rate of return than regular tech.
Cool. And just to say, we can follow up with these slides and also the full deep tech report as well, so you can dive into it at your leisure as well. But yeah, thanks for the question. We had another one as well, which was on slide 12. The European investment landscape is inclusive or exclusive with the UK? That's inclusive. So yeah, all of the European data. UK is still part of Europe.
Yeah, no, we are not talking about European Union, basically. We are talking about Europe as a continent, let's say.
Cool, nice. Shall we move on?
Yeah, so then when we look by stage, where we've seen the most like momentum has been at the growth stage in the last 2 years, while there's been a strong correction in the later stage, about 50% from peak. And also we see a bit at early stage, a bit of slowdown even there. But what we see a really strong growth is at the moment at the growth stage. So there's been quite a lot that was growing there, and that is now scaling up. When we look at the share of capital that of overall venture funding that is going to deep tech, this is at all-time high in Europe. About almost 1/3 basically of the money have been going into deep tech, 28%. And this share is significantly higher than any year before and up 2.5 times in the last decade. So, when we look beyond the oscillation of the overall VC funding landscape, we definitely see that deep tech is rising as importance in the agenda.
Yeah, and it's similar for the first few months of 25 as well.
Yeah, it's around still 25-26% when I checked. Yeah, and in fact, the Q1 of 2025 started already strong above the last 2 quarters. We saw a lot of notable rounds around, of course, AI, isomorphic lab spin-off from DeepMind, Neural Robotics in AI robotics, Intesha in AI, It's Ocean in drones for maritime data and surveillance. And then we see also around health in eco-health, quantum and fusion. So all topics that, are all relevant, all that we unpack in the overall report, but 2025 is showing that this momentum is keeping up, basically.
Nice. And maybe you get to this in a bit, but as well, I'm interested in whether some of the areas you mentioned here, are they some areas where we feel that Europe can win in terms of, if we're thinking of global competition? You mentioned AI here, also quantum. There's a lot of AI and quantum in the rest of the world as well. Are there some areas where Europe is really kind of over-indexing within deep tech?
Yeah, we have a good visualization on this later on, but definitely Europe is pretty strong on quantum in all parts of the stack there. We also, on AI, honestly, we are a bit behind across many topics, especially just, pure size of the capital that is going in. But we have a lot of potential in, let's say, applying AI to the deep tech and industrial tech problems. We have a lot of expertise around that in Europe, and where most people, also the founder and expert investors, professor we talk with for the overall report, where they see the most opportunity for Europe is really applying AI into these things. So of course, robotics is a good area where Europe has a lot of potential, a lot of expertise, a lot of also commercial deployment already in terms of how many robots are we using in Europe. So all these areas we definitely see strengths in Europe. On the AI model maker side is where probably we are not trying too much to compete beyond a few players. And yeah, so in fact, if we look at what's been happening in the last, if we look since 2020, Europe was growing a bit less than the US, but comparable. But in the last 12-24 months, there's been just an unprecedented amount of capital going into AI model makers in the US. And so if the figures are just, like completely much higher for the US, we have seen the 40 billion round in OpenAI just announced. So of course, that kind of capital is not flowing in any sector in deep tech in Europe at the moment.
Yeah,
whether it's good spent or not, that's another topic, but definitely there's a lot of money going there. That wasn't the case. The gap was closing before, and then AI is widening again the gap between US and Europe.
Right. Yeah, I was going to say the 59 billion of 2025 looks frightening on its own, but even without 40 billion off that, and
it's still a lot. Yeah.
And actually, maybe just on that 40 billion round, I mean, the AI really seems to have changed the game in terms of just the sheer size of rounds that we can expect, or that we see in venture capital. Like, is this changing venture capital? Can we still call it venture capital? Like, it's just, I mean, it's always been a game of outliers in VC, and big rounds can swing things, but 40 billion in a single round is, we haven't seen that before.
This is the first time. It's whatever we want to call it, is still a total bet in a private company. So of course the pool of money is not the basic VC with 1 billion in assets under management. It's some huge players, it's people like SoftBank and others that are doing these bets, sovereign wealth funds, these kind of players. But this is the game, and of course it's a game of outliers. There's not just only OpenAI, of course. We've seen Anthropic, we've seen other players raising huge amount of money. I guess it's just seen as the next tech cycle after going on the internet and going into mobile. So the amount of the opportunity out there, if you capitalize well on that, is probably unprecedented in the last 10 years, and some people are willing to bet whatever amount on what they think is the winning player.
Yeah, so effectively they see it as a bigger opportunity and also potentially even more of an opportunity to build monopolies in it, because that's also the...
Yeah. And whether that is correct or not, we can debate, but definitely that's the vision to be, more monopoly player in this new shift.
Mm-hmm. Cool.
Yeah, and when we look at Europe also, one key thing is that half of the money at late stage, when you look at mega rounds, it's coming from not European investors, which is something we have been flagging across the years. And of course, in the new geopolitical environment, it means that the scaling up of European deep tech is often reliant on the US, but in general on investors outside of Europe, which can mean that there's a lot of uncertainty and could create problem in the new situations. So
yeah, there's been a lot of chat for a long time about the potential problem of a lot of the capital coming from overseas in Europe. Do you think that will, a lot of the conversation before has been around like, oh well, we'd like the returns to stay in Europe and go into European pension funds instead of North American ones, all that kind of thing. But will the geopolitical factors, to understate it a bit, have more of a convincing effect, do you think, on mobilizing and unlocking some capital for these later stage rounds in Europe?
Yeah, no, basically until 2 years ago, and especially the last few months, the topic was, we are creating some really good companies in Europe, but the value maybe is flowing in the US financially. So it was more that kind of topic. And now it's like, can we, especially in deep tech or in sensitive areas, can we allow that a lot of the capital is coming from outside of Europe? That's of course can be a liability if things go not exactly aligned. So there probably it's a bigger pitch than just a bit of financial. That's in the long term is super important, but in the short term it wasn't picking up enough attention. We definitely see this new narrative and new problem picking up much more attention. Whether we are gonna see really a strong shift or not is still to be seen. In general, VC tend not to really follow too much the political landscape. They just tend to chase opportunities. And of course, there's still a lot of connection between the US and Europe, but it could start to change because if really the default for many startups in deep tech was, you start from Europe, then you target the US to scale up. Even sometimes the US was taking up the role as an anchor market with the first, sometimes even clients there. And this is all to be seen if it's gonna change, if tariff really scale up and they start to change this, then there could be either a push to refocus commercially on the European market, or some players might just shift to the US, their headquarters. So we need to see how this plans out. But one thing for sure is there's a lot of uncertainty, and everyone is just trying to understand what's going to happen. Also startups themselves. We need to see what's going to happen in the coming months. But yeah, probably the choice is either anchor yourself even more around Europe, around sovereignty, around stability there, or try to have more access even to the US than before. So these are like two different avenues to go around this.
Yeah, I mean, far from ideal, but I guess startups and investors in this space are more adaptable and more comfortable with uncertainty in general. So maybe that kind of puts them at an advantage compared to other industries a little bit. But what we think probably is it's unlikely to affect demand from the international investor side, but could be used to unlock supply of domestic capital.
Yeah, it could impact more like customer demand, in the sense that if your clients were often US at the beginning, especially, that can change if tariffs are there, and there's even a push on those corporates to buy more US based. So that can really change the game even more than the financing side.
Cool.
And yeah, talking about the financing side in Europe, of course, there's a lot of dedicated deep tech funds. Just as we were discussing before, they are mostly focused around pre-seed and Series A, Series B. There's less capital, the Series C plus, both in really dedicated deep tech fund, but also in, let's say, agnostic funds, generic funds that have strong expertise and strong activity in deep tech, and that is where we see more, global investor making the shift in. Also, the similar aspect is around M&A. When we look at the big exits in deep tech, a lot of that is about either listing in the US or being acquired by corporates or PE from the US. So, for instance, if we look at 2024, the two biggest exits were actually secondary exits in dark trades. Was listed in the London Stock Exchange, focusing on AI-driven cybersecurity, and it was bought and brought private again by Thomas Bravo LP from the US. So they just saw that this company was really probably undervalued in the public market in London, and they saw that as an opportunity to bring them back private and make some money later on in the years. And then Essentia in AI drug discovery was acquired by Recancio Pharma, another player in the same sector in the US. So of course this also highlights a bit of reliance in the exit market on the US, which is even probably starker than the financing one. So if we see this changing, then what's really the exit avenue for deep tech in Europe? So that's why we are seeing a lot also more conversation about this capital market union to make it really happen. So all to be seen, but that's an important topic also. Mm-hmm. And looking a bit inside Europe, someone was asking before, the UK is the geography that attracted the most funding, followed by France and Germany. So no big surprises here. UK has been also growing quite well in the last 12 months. Also Germany showing a strong momentum. And when we look at the specific hubs inside these countries, of course, London is always a big hub, followed by Paris, and also one and that's really been ramping up in importance is Munich, especially in the defense, security, and resilience space, where it's kind of probably now the main hub in Europe.
Maybe to mention though that things are a little bit more distributed in deep tech than overall tech. Like if on that previous slide, we would normally see UK more than double the next country, and so it's kind of. Yeah, it's a little bit more congested, which is quite nice that there's stuff going on in Switzerland, Netherlands as well, Sweden. Yeah, no, definitely. So it's still probably the first 6-7 biggest market really, dominating. But among the, those 6-7 top markets, it's not like the UK is 3 times more than the rest, let's say. Just a quick note on the side of gender inclusion in deep tech. In 2024, we still had only 13% of VC funding going into a startup with at least one female founder. So we are counting, also mid startups in this 13%. So 87% was in all male teams. Still, it's an improvement compared to many years ago in 2016, 2017, but then we saw pretty much progress stalling there. There's great companies in every sector. We highlight a few here. We have great mapping on the platform, and still 1.9 billion across 300 companies last year, but we really don't see that kind of step change into achieving more inclusion here. It's similar again to overall tech, this kind of percentage, isn't it? Yeah, it's not that far from the overall tech. There's not a huge difference. We see more differences inside certain segments inside deep tech. Usually the health-related space has more gender diversity, while some stuff more around semiconductor or robotics, we usually see very little. But it's pretty much in line with the rest of tech. So it's a broader tech ecosystem problem, not just deep tech. I think people might expect it to be even worse though, to be fair, whereas it's kind of the same.
Yeah. No, it's no, we see good, but let's say with over half of the STEM graduates being women today, we can expect this kind of stuff. We should expect even more, probably.
Yeah, untapped potential.
Yeah, and in talking about untapped potential, there's of course a lot of untapped potential in European university and research centers. We know that Europe has great research, great universities, but also research centers. Not all of that translates into commercial and startup creation, less than on the other side of the Atlantic. But still, we have great examples also in Europe. Universities like Ford, ATH Zurich, Cambridge, but also APFL in Lausanne to Munich have been really good at translating this research into commercial success in startups. And we are gonna unpack this more into future researches. And to just clarify how we go around this, we work with the single university, single research centers, gathering this data and interacting with them, making sure that we can paint a picture of what's coming out of research in Europe.
Yes, lots more on this coming soon. But yeah, I think really interesting to see, because we have kind of the number of startups or spinouts that come out of each university, but this one's really showing the actual commercialization, the value that these companies are creating, and putting a number on it.
Yeah, and looking at what's still missing for Europe also to unlock more the ecosystem. It's also to be said, of course, we are a newer tech ecosystem in general compared to the US. So if we look at the US, we see some past success stories really having a huge success flywheel, what we call startup mafia often. So places like companies like Tesla, Uber, Palantir, LinkedIn, SpaceX, have then created hundreds of their employees went on to create hundreds of companies, lot also around deep tech. While in Europe, we are earlier on in this journey, we don't have those kind of still huge scale ups in deep tech sometimes. And so we have a few examples that are, popping out. DeepMind in its own way, it's a really good startup mafia, creating a lot of interesting companies out of it. Also, early things in Oak in France, for instance, but we're still really early in this, having flywheel effect of successful exits, then employees and founders going on and creating new companies. So we are still a bit an iteration behind on this. Then what we did in the report is, of course, to deep dive then into the specific topics around deep tech. So we focused on 7 sectors: novel AI, future of compute, novel energy, space tech, resilience, computational biology and chemistry, and robotics. For just for time reason, we're not gonna deep dive each of them, but a couple of them. When we look at, we call these novel deep tech segments, in the sense that it's the new stuff coming up. This we see a massive growth, like 56% from last year to 7.8 billion, with a lot of that going into novel AI around autonomous driving, LLMs, then future of compute and novel energy as biggest categories. And then there was a question on this before, like where is Europe, strong or let's say not strong compared to the rest of the world? Definitely around quantum, there's a lot of activity in the startup scene in Europe in all the quantum stack, from computer and processor, cryptography, and the rest. We also see some segments of space where there's strength in the European ecosystem around Earth observation, around in-space operation, and things like this. Where we see really lagging behind is on the side of AI chips and processor, AI model makers, those kind of topics, but also sometimes humanoid and so on. And also a few segments like launch vehicles around space. Definitely we are much behind the US with SpaceX and so on.
And in the process of this report, we kind of dive into like lots of different subsectors and technology areas and all sorts. But I'm also curious, like, these lots of these sort of moonshot opportunities. Some of them can manage to hype behind them, others less so. But are there some areas that you feel are kind of, a long way away, let's say, from being a reality, that are maybe overhyped, that's like where some of the significance or market size is exaggerated compared to what we hear about?
Yeah, so like being far from market, definitely there are some segments that are very far from market, but that doesn't mean that they're not hugely important to bet on. Of course, nuclear fusion, the joke is always that nuclear fusion is 30 years away, and it was 30 years away 30 years ago, and still 30 years away today. But probably that's it's not true anymore, this joke. Like we are starting to see things going commercial, like not yet, but companies really committing to going commercial in the next 5-10 years. And the same, quantum, we are starting to see real use cases in the industry. So I wouldn't say, there's something really totally out of the market. There are certain segments that I'm personally not a fan of. And one is on top for Europe, which is around the hydrogen economy, which I'm not a super strong believer in, honestly. But for the rest, I think there should definitely be, in general, more money going to deep tech, especially in Europe. So I wouldn't say that any of these things we shouldn't invest on. It's mostly about understanding, can we win? Do we need to prioritize certain things, or do we try to compete in everything? It's more around those kinds of logic for me.
Go on, tell us more about why hydrogen is overhyped there.
I just think, looking at the history of the technology, it's lost several cycles. We have seen several cycles of hype and never, a market fit, and always being beaten by the alternatives. And there's definitely some super useful use cases, but there's a lot of money pouring in things that don't really market. And we see continuously costs being revised up as projection. We keep seeing, no commercial takeoff and so on. So there's definitely something to be built there, but there's a lot of money that can be wasted and will keep being wasted.
Okay. Anything else like hydrogen where you're like, there's too much money going to this thing?
I think one thing that we discussed in the deep tech report is the battery space. And I think, there is an example where the market is totally there. The battery market grew like 50% this year. And, there's massive opportunity, is massive global market. It's just like, can we win at this stage, and where can we win? And of course, we also the fallout of Norvolt with all the lesson learned. We unpacked that in the full report. And it's just, is VC funding the best way? Do we need a startup, or do we need, someone else to play there? Do we need to only play new chemistries and let go of what's commercial today because we are too far behind? So it's more logic around that really, the market is there. It's just, you need to choose the right segment inside it.
Okay, cool.
Yeah, and then we go a bit specific in a few of them. So of course, novel AI, massive growth in Europe in the last 2 years, where we saw most of the activities is around LLMs, of course, generative AI, so foundational models, but also, AI coding, AI agents, image and video generation. And then there was the outlier of also Wave 1.1 billion round in autonomous driving. So signaling that also we shouldn't forget that there's stuff beyond LLMs that's also happening.
Yeah, a lot of them to be a category winner as well. Like they really have a big shot.
Yeah, it's like we saw. I think I think people often forget how much money went into this already. Like in 2017 to 2021 in the US, like there were, I think, 20-30 billion going into autonomous driving. And not all of that played out well. There were many like giving up, like even Uber at a certain point tried to have their autonomous driving unit, then it sold it off and it gave up. And then we saw many planes being burned out, Cruise and so on. We now see that, are really going on the streets, really starting to be there deployed. And yeah, Wave came up with a totally different approach than most of the other players. Seems that, they really have a shot on making this work in a different way from players like Waymo in the US, more like agnostic, but super interesting. And yeah, great to see this coming out of Europe. Yeah, and of course, behind all of this, we have mapping of the startup that we considered, and you can explore all of them later on in the platform. But of course, in AI, great to see the growth, but Europe still invested like 7 times less than the US in 2024. So this is a huge gap we were discussing before. Like usually the gap is around 3 times with the US, 2-3 times, while here, 7 times is a pretty massive gap. So definitely, they are betting on this much more than Europe. Some are calling into question some of this investment in the sense that, there's all this rush in building data centers, a lot of money deployed also in that side. Then maybe there's, we are going faster than the demand, we will see. But, still, of course, it's a generational opportunity. And we saw, of course, if we take OpenAI, is the fastest company ever to reach, like a scale of 3+ billion revenues. They reached in 2024, 3.7. And according to their own claim, they say that they're going to surpass 12 billion in 2025. That's something, like unheard of even in tech. So, the revenues, the demand is there. They are proving that, there's actually demand. We need to see, if this sustains in time, if they can build, a competitive moat. That's where the questions are. But, definitely there's unprecedented demand. I think this was shown that there's now 1 billion people using ChatGPT. So like, I don't think we can think of many other tech products that, have 1 billion users, especially this early. And also we ran recently an analysis on, this is not all deep tech, many are application, but still showing that, AI startups are really achieving all like very fast, high level of revenues with super efficient and lean teams. So there's definitely, there's demand, and this demand is translating in really commercial value that's out there. And we cannot say that, they're not selling anything. They're actually selling a lot of products.
Yeah, just to say, we've also got a dashboard of these this revenue efficiency index on Dealroom as well, which we've done with Flashpoint, which looks at exactly these kind of like most bang for buck startups generating revenue with small headcount.
Yeah, and then there's much more in the rest of the report that, we don't want to unpack everything here, but we go into trends like discussing LLM specialization, how agents are moving toward reasoning and multi-systems, and of course, the next frontier in integrating physical world understanding into AI system. And of course, then the big debate around open versus closed source, and also what DeepSeek showed. Do we really need? Is there really like a competitive edge, something that this massive player like OpenAI or so on can fend off all the rest of the competition, or are these models becoming like something totally commoditized? So we will see. And what we are seeing is that these players are massively building data centers too, and they see maybe the edge on just having the computing power, because the model itself, you cannot keep enough of an edge compared to the competition. And of course, where we were discussing before, Europe lags behind in investment in model makers and also in computing infrastructure. We have good high performance computing, but we don't have really AI data centers too much. And where we see most of the opportunities around the application layer in deep tech and industrial tech in Europe.
Cool. I just want to say there's 10 minutes to go. We're going to run through a couple more of the deep dives, but if people have questions, do check them in the Q&A as well, and we'll try and get to those towards the end. But yeah, future of compute.
Yeah. So in future of compute, also massive activity around mostly quantum AI chips, brain-computer interfaces, and photonics. There's a full mapping on this, and we're connected to the topic of before. Of course, a topic we unpacked a lot is around the demand for computing in AI. So there's all sorts of projection about an explosion of electricity demand from AI data centers. But when we look at what happened in the past with data centers, we managed to keep consumption pretty stable in front of demand increasing 7 times in the decade from 2010 to 2020. So this is to say that there's huge opportunity in energy efficiency advancement on the computing side. And so this is a small overview of many different avenues to achieve this huge energy efficiency gain. And in the report, we focus especially on the photonics and optical computing side. So there we're talking optical interconnector, photonic chips, and the massive advantages in speeding up data transfer, which basically the problem is that in data center, you spend a lot of the energy and the heat in just moving around the data, not really doing any computation. And so if you can speed that up 100 times faster with optical, then you can save 50-80% of energy saving in that topic. And we are seeing a strong growth in the photonic sector with activity in many topics, but especially we have seen a really strong early stage still startup scene around data transfer interconnection for AI, telecom, and data center, which has really been ramping up in the last 2 years. For instance, some rounds around that include Black Semiconductor, but Orla Networks last year, which really focus on this aspect. In novel energy, like midst, like we had really a big push in 2021, 2022, then a cooling down, and then we see activity again. Was a trend that for sure can be noticed is that 3 of the top deals were around nuclear, with either fusion or small modular nuclear reactor in modular reactor in fission. And there's of course we see this in both Europe and in the US. Already in 2025, the US almost matched last year with 1.1 billion, but also in Europe, there's already been several notable rounds like Marvel Fusion. So definitely, the renewed interest in AI with the this explosion of demand, plus the sovereignty angle is bringing back attention to nuclear. And we have a really strong deep dive on all aspects nuclear in the report, so I encourage you to look that up. And we have a lot of companies in Europe at the early stage doing fusion and fission, but they are undercapitalized compared to the US. Basically, there's really strong things at the early stage, but we don't see that 1 billion plus deployed into these companies.
Which is actually kind of surprising, because historically a lot of the research into fusion has happened in Europe, like in the UK and in Germany and the south of France. So is it kind of a lack of access to the sort of investors who have the knowledge and risk appetite to invest in those, or the ticket sizes, because you kind of need to raise quite a lot of money if you want to build a reactor? Why do you think that is? Because we should kind of have the talent and the research pedigree in Europe.
Yeah, we definitely have we have nearly like 25% of the world VC-backed startup in fusion are in Europe, and there's really great ones. But the research, of course, coming from here, like ITER has been the training ground for many of these, even if old generation tech, which is in the south of France, CERN, where many things came out, at Max Planck also. But, we are not seeing, for instance, in the US, even a few years back, there was a 3 billion investment. Like something like that is not happening in Europe. Probably for the depth also of the, financing market. Some people spin it in a positive way of they are making sure that really the tech works and they have fit before really raising this amount of money. But, of course, there's not a direct relation with having more money and scaling up faster, but, you have more opportunities sometimes. So we will see how this plays out. Also, I feel that the fragmentation of Europe doesn't help, because sometimes we have players, in different countries doing something maybe similar. And maybe if we were really united Europe, we will have a couple less startups and a few of these teams together, basically.
I'm going to bring in some of the questions from the Q&A now as well, because Kyle says, are we more into fusion than hydrogen now? To which the answer is maybe yes. What do you think, Lorenzo?
Yeah, definitely the momentum in the VC community is more around, I think, fusion and fission. There's a lot of fission interest also at the moment. Hydrogen, it's not like it's new, it's shifting, there's no one is trying anymore, fortunately, to do hydrogen vehicles or stuff like that. There's a bit on electrolyzers, and there's more around green molecules like sustainable aviation fuels and so on. Not everything is really deep tech there. A lot of that is more infrastructure heavy, building plants, and the technology maybe it's the first time you put it in a plant, but it's nothing new. We know these processes from like 100 years. There's a lot of activity there. It's not everything is really deep tech like in hydrogen. Yeah.
Okay, cool. Another question about hydrogen, actually. By hydrogen, do you mean technologies like direct capture from the air and electrolyzing water?
Direct air capture, no, that we consider carbon removal. We consider electrolysis, yes, and other types of, hydrogen production with carbon capture and things like that. And also whatever is around, the storage or transportation of hydrogen and these kind of things. We don't consider the carbon removal side. We do consider sometimes like things like e-fuels where you combine hydrogen with carbon to create, substitutes for jet fuels or shipping. Those kind of stuff can be sometimes considered hydrogen or not, depending exactly how the players play that in the stack.
Cool. A couple of questions about other segments we haven't mentioned yet. So one person asked about indication on investment in deep fake detection companies. And also somebody asked about advanced materials. But both of those things we do map and would be able to get, I think, right, Lorenzo?
Yeah. I don't have a slide on this right now, but yeah, on deep fake detection there's been a few investments, not like something huge yet. I think there's some cybersecurity companies that have an angle there. There was a recent also exits on that with Recorded Future, for instance, not exactly around that, but relevant. And there's a few that I know that are active now in Ukraine to do this at the scale of really state level also, but it's still picking up as a sector, let's say.
Cool. There's also a question which maybe leads into this next section, which is with the potential of 800 billion in defense tech by the EU, how do you think this will affect the wider deep tech market? So I'm aware we're really short on time, but maybe we can whiz through this next bit and
yeah,
as well.
Sure. Yeah. So in the report, we showcase that, definitely there's been a massive growth in deep tech per resilience, defined really as defense oriented in the report. And especially we see, around AI per defense and autonomous systems, those like whether drones or, like maritime or ground robotics or these kind of things. And we of course mapped it in great length. And this is because, of course, like it's being completely reshaped how, the kind of military market works. Like you have this really small autonomous system that can take out something much more expensive in some cases. And we've seen the Ukraine-Russia war turning out into a war of drones almost. And definitely, we also did, on top of this research on European deep tech, we also did a research with NATO Innovation Fund where we define at large the world defense, security, and resilience space. So in there goes, of course, all the defense side, but also some things around space, energy security, quantum, and other critical infrastructure like AI computing, but also supply chain resilience, in semiconductor or in other advanced materials, and then health crisis preparedness. And when we look at that, is much bigger space, accounting for 5.2 billion in 2024, and which is kind of 1/3 of all deep tech, so it's like a huge space. And definitely there's huge momentum here, like because everything is changing, like there's all this new budget, all this new like rush to have these capabilities brought back into Europe for sovereignty. We have to see how much of that translate into money that startup can easily access. Like in the US, the DoD, the Department of Defense, does a really great job sometimes is, in being more flexible in procurement, that startup can access that. And we saw the same in the past decade with NASA and the US Air Force being, the catalyzing for players like SpaceX and many others, growing up in the US. And when we look at Europe, this is something that has been missing in the past. Government and other actors playing really the role of clients of making easy for startups to access procurement. And there's a lot of work, a lot of progress being done in this, but we need to see exactly how it plays out in the coming months, coming years. If really startup can tap well into this pool of money, is gonna be centralized enough, at least at the EU level, and how this plays out really for startups. Yeah, we will not have time to go into everything, but there's also a recap in the deck that we will send you of how to see actually this stuff inside the platform, how to explore, startup being launched by PhD or new early stage startups in deep tech, how to, explore startup mafias, employees that were working at, some of these companies and then are starting their own spin-out data, and also, exploring and discovering trending and hot markets around deep tech with a granular taxonomy, so you can explore hundreds of segments and then see what are the trends. You can see it very easily, which are the main player, what's happening in the market, and also get your first idea about a sector, and also of course compare trends globally around segments or around geographies. I want to close off with a couple of things. We are offering an opportunity for who's interested in having a chat with us and seeing, how you can leverage this data for your own deal flow, investment research. So, feel free to scan and book a call. We are also one topic that we mentioned before quickly that we are looking to unpack in the coming months more is the spin outside and research innovation. So we are in the moment in discussion with many partners to do a European spin out and university innovation report. So the idea there is really to track how the research and the outcome coming from this research are going into the startup ecosystem, identify points of improvement, gaps and things there. So if you are really interested in the topic, please reach out and maybe there's still an opportunity to come on board.
Yeah, exactly. So yeah, to kind of reiterate, like all of the data in these reports comes from Deal Room. It's where, because we track the world's innovation ecosystems, that's why we're able to discover these companies and unearth the trends. So you're able to play around with it all yourselves or look into some of those other topics like deepfake detection or advanced materials that I mentioned in the chat. And yeah, we've got this great opportunity, which is that if anyone wants to continue the conversation, because I feel like there was a lot more we could have talked about even in this already over an hour, but you can book a call, chat to us about deep tech and talk to Lorenzo and what your needs are, and we can see if we can help you with that at Deal Room. But yeah, with that, I think we better finish up because we're already over time. But I want to say thank you very much, Lorenzo, for sharing, and to everybody for joining. And we'll be following up with the recording and the slides, and hopefully see you again soon.